Hey everyone, before we dive in, here's something really cool. You're listening to an episode created almost entirely by AI. From the script to the voice, this is part of the AI Takeover series by Blockchain DXB, where we explore what's possible when humans hand over the mic to machines. There's little to no human involvement, and that's what makes this episode so powerful. Welcome to the future of content creation. Let's get into it. This episode is powered by Amana, the region's first and fastest growing regulated all-in-one trading and investing app. Whether you're looking to invest in US stocks like Apple or Tesla, or MENA giants like Adinoc or Salik, Amana puts the financial market at your fingertips. You also get access to gold, foreign exchange, ETFs, futures, and commodities. With over 375 assets to choose from, they've got the largest crypto selection in the region. And listen, guys, if you want to build long-term wealth without thinking about it every day and want to automate your investing, just set your monthly budget, choose your preferred categories, and let Amana do the rest. No fees, no lockups, and 100% customizable. Even better, funding your account is frictionless, and funding your account is easier than ever. You can fund your account with Apple Pay, Google Pay, credit cards, instant bank deposits, and even your crypto wallet. No friction, no hassle. And if you get stuck, Amana offers 24/6 real human customer support and personalized sales assistance. Because you're part of the Blockchain DXB community, you get an exclusive offer. Register with the code BlockchainDXB and make at least one trade to receive a $100 trading bonus credited to your account the following month. So what are you waiting for? Download the Amana app now. The link and code are in the show notes. Next up, Blockchain DXB is proud to be the official media partner for one of the biggest blockchain events of the year, the Blockchain Futurist Conference. For the first time ever, North America's leading crypto event is heading to the United States, taking place at the iconic Guitar Hotel at Hard Rock in Hollywood, Florida. Alongside it is ETH Women, happening simultaneously. Expect multi-stage panels, NFT galleries, DeFi showcases, tech demos, metaverse experiences, and more, all under one roof. It's where the smartest minds in blockchain, crypto, and AI will converge. Get 25% off tickets by using the code DXB25. And yes, I'll be there with exclusive live coverage, behind-the-scenes interviews, and spotlight features on groundbreaking projects. Mark your calendars, November 5th and 6th, 2025. Visit futuristconference.com and use code DXB25. Link is in the show notes. Next up, Blockchain DXB has two more interesting partnership news to announce. First up, with Future Blockchain Summit and Fintech Surge 2025. Blockchain DXB is an official media partner of Future Blockchain Summit and Fintech Surge 2025. Future Blockchain Summit is one of the biggest and oldest blockchain summit taking place in Dubai, going back to almost a decade, 2017 to be precise. The event takes place between October 12th to 15th at Dubai Harbour. This is where blockchain meets fintech to redefine the future of finance. 250 plus world-class speakers, 1,200 plus investors, live demos, product launches, and the exclusive invite-only GITEX Digital Assets Forum, all under one roof. From Web3 pioneers to fintech leaders shaping payments, banking, insurtech, AI, and DeFi, this event brings the entire ecosystem together. Startups, this is your launchpad. Get in front of top VCs, accelerators, and industry leaders. For blockchain and fintech companies, this is where connections turn into partnerships and dreams turn into exits. Register today at futureblockchainsummit.com. Don't just watch the future unfold, own your space in it. Remember, Future Blockchain Summit and Fintech Surge 2025. The registration link is in the show notes below, and see you at Dubai Harbour. Second partnership news kicking off from today is with the leading Bitcoin event organizers on this planet. And this year, Bitcoin Asia is taking things to another level. Bitcoin Asia are hosting a massive gathering this August in Hong Kong, and Blockchain DXB is proud to be an official media partner of Bitcoin Asia 2025. Taking place this August in Hong Kong, Bitcoin Asia is the region's premier Bitcoin gathering, where builders, investors, and innovators meet. It's really an honor for Blockchain DXB to be associated with Bitcoin Asia. Now at this event, expect powerful keynotes, bold conversations, and a headlining session with none other than Eric Trump. He will be sharing his vision for Bitcoin's long-term potential, its role in global finance, and Asia's massive impact on adoption, and a lot more. So listen up, guys. From infrastructure to regulation, privacy tools to lightning development, Bitcoin Asia connects global Bitcoin communities and drives innovation across cultures and markets. And as part of this partnership, you can register for the Bitcoin Asia using the code DXB. All the details are in the show notes below. If Bitcoin's in your blood, this is your event. So, register today at asia.btc and don't forget to use code DXB for 10% off your tickets. Bitcoin Asia 2025, Hong Kong is calling. Be part of the future of Bitcoin. Next up, Advanced Media is the largest distributor of professional video, photography, cinema, and broadcast accessories in the Middle East. They represent over 100 major brands, including DJI, Hasselblad, Red, and Rode. The mic I'm using to record this? Sponsored by Advanced Media. But what really sets them apart is their commitment to purpose. People, planet, and prosperity. That's not just branding, it's their actual business model. They've partnered with SAE Institute in Dubai to offer scholarships to students pursuing a bachelor's degree in filmmaking, each worth AED 50,000. They also run regular workshops, training programs, and tech showcases across the region. For more info, visit amt.t, that's amt.tv. Finally, let's talk about something every crypto investor should take seriously: security. And that's where Ledger comes in. Ledger is one of the most trusted names in crypto security. Their hardware wallets, like the Nano S Plus and Nano X, keep your assets safe by storing your private keys offline. That means you're protected against hacks, malware, and phishing attempts that can compromise online wallets. The company is headquartered in Paris and is constantly innovating. Their team works with world-class security researchers and regularly tests their own products for vulnerabilities. It's why Ledger wallets are used by millions around the world. Using a hardware wallet isn't just smart, it's essential. If you're serious about crypto, it's time to stop relying on centralized exchanges or browser wallets. Click the link in the show notes to order your Ledger wallet and support this podcast at the same time.
Welcome back to the Deep Dive. Today, we are looking at, well, one of the most jarring contradictions I think we've seen all year.
It really is.
You sent over a stack of sources that, they describe a market that feels like it's operating on two totally different timelines.
Exactly.
On one hand, you have the short-term market, and it is just terrified. People are running for the exits, classic panic selling.
And on the other, you've got these institutional titans, quietly laying the actual concrete for massive future adoption.
That dissonance is exactly what we need to get into today.
Right. Our mission is to sort of cut through all that noise, the price crashes, the huge outflows, and set it against the quiet strategic moves being made by the biggest names in finance.
Yeah.
We're talking BlackRock, Jack Dorsey.
All while regulators in the Middle East are drawing these incredibly firm lines in the sand.
That's a perfect storm.
And the paradox is so stark. The market sentiment metric, it's at what sources call extreme fear. The number is actually 18.
18? That's low.
It's incredibly low. But at the same time, Harvard University is increasing its Bitcoin exposure, and crucial payment tech is going live. This gap, what does it mean for you? We're about to unpack it.
Let's do it.
Okay, so let's start with the cold, hard data, because you need to understand where the fear is coming from. This is the market reality for late 2025. You know the saying, whenever there's a dip, treat it as a gift. Well, right now, this dip is looking less like a gift and more like a major correction.
Oh, it really is. And the data confirms that fear is justified, at least by capital flight. The global crypto market cap is down significantly. It's hovering around $3.28 trillion.
And what about Bitcoin specifically?
Bitcoin has had a brutal run. It's down about 10% over the last 7 days, trading around $94,920 when these sources were published.
And that pain isn't just in the big tokens. We're seeing capital bleed out of decentralized finance too, right?
Precisely. The total value locked, the TVL, in DeFi has seen a really painful drop. It's down from about $160 billion in September to, 122 billion today.
Wow.
That's tens of billions being actively pulled out of the ecosystem.
And nothing signals institutional anxiety like the ETF outflows we're seeing. It's one thing for retail to panic sell.
It's a whole other thing when the big money moves, and they're moving. The last 24 hours in sources show total outflows of a stunning $685 million.
685 million.
Yeah. Bitcoin ETFs led the charge, shedding 492 million, and Ethereum ETFs weren't far behind with about 178 million flowing out.
Okay, hold on. If nearly 700 million was just yanked in one day, what are the sources saying about why? Why are these big strategic players taking money off the table now?
It's a great question, and the analysis points to two things beyond just, simple fear. First is tax loss harvesting. It's year-end. Institutions are selling losers to offset gains elsewhere.
So, standard playbook.
Exactly. And second, short-term profit taking. A lot of these players got in earlier this year, and this volatility gives them a clean exit to lock in profits temporarily before they, redeploy that capital later.
So they're reacting to the short term, but it doesn't mean they've lost long-term conviction.
That is the perfect way to put it. And that brings us to the other side of the paradox.
Right. The outflows show the Wall Street reaction, but Silicon Valley is building. Let's talk about Jack Dorsey and Cash App.
This is where it gets really interesting. Cash App is integrating the Lightning Network to make Bitcoin and stablecoin payments, easy for everyday people. They're solving for speed and cost.
Okay, for anyone listening, the Lightning Network can sound a bit complex. What's the simple breakdown?
The best analogy is the bar tab. Lightning is like a fast lane built on top of Bitcoin. Two people open a payment channel, that's the bar tab, put some Bitcoin in, and then they can transact back and forth instantly and for almost no cost.
Because it's all happening off the main chain.
Exactly. The slow, expensive Bitcoin blockchain is only used to open the tab and to close it. Everything in between is instantaneous and dirt cheap.
We're talking fractions of a cent, right? Ideal for micropayments, tipping creators online, that sort of thing.
Perfect for it. And Cash App has made it even simpler. You can now pay a Lightning invoice directly from your US dollar balance. You don't even need to own or hold Bitcoin yourself.
That's a huge step for usability.
And the incentive for merchants is, it's almost unheard of. Bitcoin payments are completely free for them until 2027.
Wow. That's an aggressive push for adoption.
It is. But we have to have a reality check here. The tech is there, but the sources point out that real-world implementation is still a massive hurdle. They mention the closure of Azriella's LN operations in Switzerland.
Right. If the tech is great and the fees are free, why would an established business like that shut down?
Because it shows the gap between the tech itself and enterprise integration. It's not just about the code. It's about, point-of-sale systems, compliance checks, accounting backends. Cash App is solving the consumer front end, but the business back end is still incredibly complex.
That friction is real. But other institutions are finding ways around it, especially with tokenization. Let's look at real-world assets, RWA, and what BlackRock is doing.
This is, I think, maybe the most significant structural development in the sources. BlackRock's tokenized BUIDL fund, it's basically tokenized U.S. Treasuries, has been around for a bit.
But the big news is its new integration, right?
Exactly. The fund is now eligible as off-exchange collateral on the Binance BNB chain. This is a monumental step.
Okay, so what does eligible off-exchange collateral actually mean for someone trying to understand this?
It means you can use your tokenized U.S. Treasuries, which are super stable and earn a yield, as immediate security for other trades on the network. The assets never have to move through slow, traditional bank settlement systems.
So you're not just holding treasuries on a blockchain. You're making them an active, functional part of the crypto economy.
It creates incredible capital efficiency. And when the world's largest asset manager does this, it validates the entire mechanism for everyone else.
But hold on, why the BNB chain? It's been criticized for being more centralized than other networks. Isn't that a contradiction, putting institutional assets on a chain that, goes against the DeFi ethos a bit?
It's a tension you can't ignore. But what the sources suggest is that for these institutions, Things like speed, security, and clear lines of compliance are, frankly, more important than ideological purity about decentralization.
Efficiency over ethos for
It
now.
seems that way. They want a reliable system, even if it's less permissionless.
And that long-term conviction is showing up in the ETF market too, despite those huge outflows we mentioned.
Yeah, this part is fascinating. You have some of the most prestigious university endowments in the world increasing their exposure. These are ultra long-term players.
Like Harvard.
Harvard reported holding 6.8 million IBIT shares, worth around $443 million, and Brown University is in for about $13.8 million.
It's a tiny part of their endowments, of course, but it's the signal it sends.
It's a huge signal. They see Bitcoin not as a short-term trade, but as a strategic long-term asset class.
Okay, let's shift gears to policy.
Uh-huh.
We're moving from U.S. institutions to the regulatory hub of the UAE, specifically Dubai's regulator, VAR. They're providing clarity, but it comes with some very firm restrictions.
Very firm. The UAE wants to be a compliant global financial hub, and that means drawing clear lines, especially on anti-money laundering.
Which brings us to privacy coins.
Right. VAR has issued a complete ban on them. And on algorithmic stablecoins, too. The sources say the rules are so strict you can't even host a meetup event about them.
But that's so interesting because privacy coins have been on an absolute tear recently, completely ignoring the market fear.
They're crushing the market. It makes VAR's stance even more striking. Zcash is up, 1,300% in 2 months. Dash is up over 300%.
So the demand is clearly there.
The demand is there, but the regulatory risk is now crystal clear. Centralized exchanges in the region are blocked. VAI is aligning with global standards that demand traceability. For them, anonymity is just an unacceptable risk.
And they're not stopping with just a ban, are they? They're tightening compliance across the board for all virtual asset service providers, or VASPs.
They are. They sent out a circular demanding stricter risk assessments for AML and CFTC. This came after inspections found some pretty major gaps in how firms were assessing their own risks.
And with the new risks they're being forced to look at.
This is the crucial policy point. VASPs now have to formally identify and integrate risks related to anonymity, which we just discussed, but also decentralized finance, DeFi, and artificial intelligence, AI.
Including AI is very forward-looking.
Extremely. It shows they're not just reacting to today's problems, they're trying to build a framework for tomorrow's technology. And the deadline for the first assessment is November 30th, 2025.
So they're forcing rapid adaptation.
In one of the world's most important crypto hubs, yes, the message is clear. If you operate here, you have to prove you can handle the risks of cutting-edge tech.
And to round out that regional context, there's another huge tech investment happening there, but in AI.
That's right. At the Abu Dhabi World Summit, you had Google, Microsoft, HP all pledging about $65 million for AI education in the MENA region.
This isn't just a donation, it feels like a strategic investment in human capital.
It absolutely is. The goal is to boost digital skills for millions of young people by 2028. It shows this clear commitment to building a future driven by technology. It's really two sides of the same coin. They're regulating the risks of crypto while aggressively investing in the skills needed for AI.
Okay, so let's tie this all together. What's the key lesson for you, the listener, when you see this massive contradiction?
I think it's that the market is behaving emotionally right now. The fear and the outflows are real, but they're driven by short-term volatility and tax season.
But the institutional machinery, the smart money, is operating on a much longer timeline.
Exactly. You have Cash App solving the retail payment problem. You have BlackRock solving the institutional liquidity problem. These are deep foundational advancements.
And the regulators are forcing the industry to mature at lightning speed. By naming risks like DeFi and AI, they're ensuring the foundation being built is sound before the next wave of adoption really hits.
Which brings us to our final thought for you to chew on. If BlackRock's tokenized fund really is the start of a massive real-world asset boom, and the sources suggest it is, you have to ask yourself this.
What is the first non-financial asset? Think a famous piece of real estate or a specific iconic work of art that will be successfully tokenized and traded using this new institutional infrastructure.